Hi, it's Elizabeth from McPhillips Toyota. This is part 2 of a 4-part series on car ownership. In this section, I'm going to talk about options for paying for a vehicle. Check out the comments in this video to watch parts 1, 3, and 4. The 3 options that you have available to you when you're paying for your vehicle are paying cash, financing, and leasing. Paying cash is pretty straightforward. You write a check or bring the money for the entire value of the vehicle, you give it to whoever you're buying it from, and then you own the vehicle free and clear. Financing means taking out a loan for the value of the vehicle and paying it off, usually monthly or bi-weekly, with interest over a period of time. The options available for your financing loan will vary depending on the total amount for the loan, whether it's a new or a pre-owned vehicle, and what your credit rating is like. At the end of a financing term, you own the vehicle outright. Leasing is similar to financing in that you take out a loan to pay off over time. The difference is that with a lease, you're only taking out a loan for a portion of the vehicle's total value. The main difference between leasing and financing is at the end of a lease, you have 2 choices. You can either return the vehicle to the dealership, sign over the paperwork, and you're no longer responsible for the vehicle, or you can choose to buy out the vehicle. The buyout amount is less than that vehicle would cost as a used vehicle, and since you were only making payments on part of the vehicle's value during the time of your lease, it can be very similar to the financing total cost paid over time. The next thing about a lease is if you're not sure if you're going to want to keep the vehicle at the end of, say, 4 years, you can get rid of the vehicle without the hassle of trading it in or selling it yourself. If you're not paying cash for your vehicle, which few people do, there's a few things that you need to bring with you, whether you're applying for a loan through your bank or if you're doing it at a car dealership. You'll need your most recent pay stub, a confirmation of employment letter, a photo ID like a driver's license, and your social insurance number. If you don't have established credit, meaning that you've never had a credit card or taken out a loan from a bank, or you just don't have good credit, meaning that you've missed a payment on a bill or a credit card, you might need to either have a co-signer to get approved for a loan or put a down payment on the vehicle. Filling out too many credit applications can be detrimental to your credit score, so it's important that you only fill out an application for a loan when you have a vehicle picked out that you're ready to purchase and you've made a deposit on it. Interest rates on loans can vary a lot. They can be as low as 0%, though that is very rare, and as high as 25%, but that's also pretty rare. On a new vehicle, you may see rates advertised at 0.9% or 1.9%, and it's important to know that that is not the same case for pre-owned vehicles. On a pre-owned vehicle, it's still fantastic to get approved at 7 or 8%. Thanks for watching, and if you have any questions, give us a call at 204-338-7985, visit us at 2425 McPhillips St in Winnipeg, or check us out online at www.mcphillipstoyota.com. Next, stay tuned for part 3, where I'm going to talk about proper vehicle maintenance.